Hey folks, Dan Frio here with your live update and our Stock Talk Tuesday. I'm going to try my darndest to get back to this on a Tuesday basis, but what we want to talk about in this session is basically right through here. So when you start seeing like stock soar as Trump thaws the EU trade tensions, consumer confidence up, when you see things like that, what does it prompt you to do? Are you making money? Do you understand what the markets are talking about when stocks soar? What is a stock? How do you invest in stocks? That's what we're here to talk about in today's video. So if you're new to investing and you're new to kind of all the asset classes, I basically just want to break down how you need or how you should be focusing on investing. If you need to get ahead in life, that's what I'm here to help you with. So my name is Dan Frio. Actually, I do this report, or a stock report, I guess a financial report, twice a day to let you guys know what's going on with mortgage rates. And the reason for that is I'm actually a mortgage loan officer, but I do have a degree in economics. And when I started talking about stock talk, a lot of people are saying, oh, I have no money and I don't do that and that's too risky. So what I started doing about 6-8 months ago was start talking about stocks on a daily basis so you can understand, what is the stock market? What are different ways to invest? Is it only stocks? How do you invest in them? How can you invest in cryptocurrency? How do you invest in bonds? Is that a good investment? And we're also going to talk real estate if that's what you're looking to do. So if you got any questions, please feel free. Why I do this live is for you guys to ask me questions. Just so you know, I'm not a financial advisor. I'm not I'm not licensed to sell securities or anything like that. I want you guys to know I'm doing this to just help you out. My goal is just so you understand how to invest and what investments do and how to do them, and that's it. So don't trade off of my news. Just use this for educational and informative purposes only. So that's my legal jargon for this. So when you see the markets doing things like this, stock soars as Trump thaws the EU trade, what are you thinking? Are you making money? Are you thinking, oh, God, what do I do? Or how can I invest? Or are you thinking, okay, I just made some money? Well, I want to talk to those out here that see this and say, okay, that doesn't do me any good because I don't know how to invest. I don't think investment's a good idea. And a lot of people just don't know how to do it and really don't understand, is it just a complete gamble or not? So that's what we're going to kind of break down in this video. So we created on this channel, we created actually a mock portfolio D24. Okay, and here's basically that portfolio. And we made adjustments to it recently. So if you watched recently, we actually added into the portfolio this trade right here. And I'll go through that with you shortly. But we actually removed one of our stocks in here. So we got that, and we also added to our position in Berkshire Hathaway. So this is going to be a portfolio that we monitor and watch. Okay, and there's a whole bunch of different things in here, like investment classes. We're going to add one today, and I'm going to do that with your help. So what we want to look at today is what specific stock, what stock do we want to own? And the reason behind it is we have a lot of investments here, and I want to go over these with you, but there's really no individual stock out here. But I want first off to you guys to understand what kind of investments you can get into. So here's basically just a layout of 4 simple investments you can make, or investment classes, and we're going to rank them from low to high. And what you should do, especially if you're a new investor in this and any of these aspects, what you should do to be as cautious as you can. You want to maximize those returns, but you don't want to kind of throw everything put everything in one pot and then lose it. So what we're going to talk about today is we want to talk and find a stock that we want to invest in. You guys are going to help me with this, so make sure you chime in as we go through here. We're not going to talk about bonds. We talk about bonds on a daily basis, and the bond market, let me pull up what I watch on a daily basis. We're going to go to MBS Live because I'm actually a mortgage advisor. So I watch this chart every day, all day basically, and this is telling me what's going on with mortgage rates. So the first thing we want to look at is right through here. This is actually what's going on in the bond market, the mortgage bond market. So when this market goes up, yields, this is giving us the price of a bond. So that's what you're seeing right through here. As prices go up, yields come down. Okay, so that's how the bond market works. But what we're focusing in on today is what's going on with the stock market, because this is bonds. This is a mortgage-backed bond. You can follow me basically daily with. And the weird thing about that bond is it actually represents right through here. It gives us the dollar figure of the bond right through here, which is usually really odd because in most cases when you're investing in bonds, you're going to see what the yield is. And that's right up through here. So this is the 10-year Treasury. It's giving us the yield. And this is an investment. This is a bond you can buy. And this right through here is the MBSs. This is a mortgage bond. And then for some reason, it gives you the price. So how you figure this out is if the price goes up, rates are coming down. If the price goes down, rates are coming up. We have a nice move lately. I'm going to show you an area that we just picked up today. So this is also an area that I focus in on and we call charting. We had a big gap here last week that didn't fill. You see this big drop? We closed here, okay, and we opened the next day down here and it just plummeted from there. So what I was hoping is we'd get back to this level up through here. Okay, we did this morning. So when you're looking at charts, this is one area that I focus in on because when you have this gap, usually the gap gets filled. And that gap, what I mean is basically that just black area right through here, that this is where we closed on one day and the next day we opened down here. So what will normally happen is that gap will get filled sometimes pretty quickly. So what I was waiting for is the gap to be filled, and it got filled today actually. Here's what we saw today. It gapped up, and then as soon as it hit that entry point right through here that filled the gap, it rallied from there. So that's where we're going to watch closely on how this goes through here. And again, this is a mortgage bond, and I'll go over on my closing bell. Every time you see this little bubble here, you can see where mortgage lenders right through here, and most of these we're set up with, they're actually coming out. You see it says better, 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 means their rates are coming down or getting a little bit better. But what we're going to talk about today is right through here, this portfolio that we created. All right, what I want to focus in on today is the news that we have in the headlines. Okay, so we recently added a position right through here. This is SLX. This is a steel ETF. So it's a basket of steel stock stuff. And we did that right here. I can show you when we did that. We did this. We added this to this position on May 13th at $56.80 a share, and the market value today is 63. So we're pretty much 11% on that trade within basically a month's time. What we just added to our position is right through here. This is basically let's go through here, the symbol. It's ARK Investments, and I want to show you we added to that position not too long ago, and we're up, what are we up right now? 2.3%. All right, the transactions, and we won't look at the dividends and so forth. So we added to this position recently. Let me show you what the ARK investment actually is and what it does. Is it should be in technology and robotics, and that's why we had it. By purchasing one share of this, what they call an ETF, you're actually getting all these stocks right through here, and that's why we did that. Okay, so let's go and pull up its holdings. So it's actually holding positions in Tesla, Kratos, Palantir, Teradyne, Archer, and a whole bunch of others. So this is like this fund right through here has a 12% position, or has 12% of its money in Tesla. So if you want to invest in Tesla, this is kind of a roundabout way to invest in Tesla, but a lot of other holdings in this automotive technology and robotics class. Okay, so what we want to talk about today is what individual stock would you guys look to invest in today? So I'm going to reach out to you guys. What would you think? And I'm going to ask questions out here. So please, if you're on here, please participate with me. What investment class are you looking at? So let's get over first off and let's look at the headlines. Where is the Trump tariff deals and everything else creating the most opportunity? Right now, here's what I'm seeing, and I'm not really sure what stock we need to pick. But energy is a big issue right now. You have energy, the Clean New Deal, the Green New Deal, or whatever that was called. Looks like it's getting shot down. So there's going to be some more energy dependence in this country, especially for AI and things like that. So what would be a good idea for there? So the reason why I brought that up is right through here. Nuclear stocks extend their rally as Trump aims to quadruple capacity. So now we know, okay, the nuclear section of this environment might be a good choice for us. Okay, so what we're going to do is just click this. Let's just click this right through here. I'm just going to show you what I do, but folks, I really would like some participation in this. Let's get over to here and let's say, okay, based on this article, I don't know much about it. Let's just copy and paste this. So we're going to go here, and I'm just showing you what I do, folks. We're going to move that over to here to ChatGPT. And here's what I'm going to do. I just created this thing here saying, give me the risk class of each one of these just so I can, help you guys understand it. But I'm going to go over here to ChatGPT and say, summarize this article for me and let me know if you think nuclear stocks or companies are a good investment. I'm going to copy and paste that there. Look what this does. It's kind of crazy. It might take a little bit of time, but ChatGPT is kind of one of the fastest ones up there. So let's see what it's telling us. It says President Trump has issued an executive order aimed at significantly expanding the U.S. nuclear energy capacity with a goal of quadrupling by 2050. So now we know there's going to be a push toward this. Investment considerations, growth potential. The executive order are expected to catalyst investment into nuclear infrastructure. The risk, though, despite the positive outlook, challenges remain. Companies like Oklo and NuScale are still in development stages and may not generate revenue for several years. Okay, so we got this. So now let's ask it this. What other companies dominate in the nuclear energy space? Let's see what this tells us. I don't know if I spelled those right, but good enough. So here's what we're going to say. Reactor technology and infrastructure. It's going to give us Westinghouse, General Electric, BMX, Fluor, uranium and mining, fuel supplies, advanced and small modular reactors, global utilities, and infrastructure plays. All right, so now here's what we're going to get. What stocks are available for me to invest? And what are the 1, 3, and 5-year returns from these companies? Let's see what this gives us. So now we're researching this. So I hope you understand how we're proceeding with this. A lot of these things you had to do in the background years before, because you'd have to analyze this, you'd have to go and you'd read reports and all this other. I'm not saying to not do that now, but there's a lot of stuff that you probably just don't understand. So what I want to give you is kind of the layman's way to look at these. Now, again, I'm not a huge proponent into buying individual stocks, but I just want to show you guys how we analyze this, and then we might be, I'll let you guys elect what we might be adding to our positions today. Do we want to add a stock? Do we want to add a ETF, or maybe we want to add a mutual fund? So let's go down and see what these are telling us. Okay, so here's what we're looking at. Performance and summary. Cameco Corporation, CCJ, 1-year return, 3 years return, 5 years. Oh, this is in uranium. Okay, we're going to need uranium, but there's a lot of other deals happening in regards to metals. So the first thing I'm thinking about is, okay, do I want uranium? Because now aren't we finding more of this in the sea, and we're making an agreement with Ukraine to maybe get some more of these things. So how's that all going to affect this? But let's just go down through and look at the results of some of these things. I think it's not giving me the 1-year return here on that, but let's just go over to the BWX. What do they do? Supply nuclear components and fuel. NuScale develops development of small modular reactors. That might be a good one we have there. Energy Fuels, U.S.-based uranium and rare earth producer. This one develops advanced boiling water for reactors. Nuclear energy startup and significantly recently growth. So maybe we'll look at Oklo. And engineering construction services for nuclear facilities. So if they're going to build these things, well, let's maybe not look at the uranium or the how we fuel these things. Maybe we look at either should we produce those, or maybe we can look at a nuclear startup company. So we're going to think, okay, Oklo or Fluor, which one of these would we want? So let's go down through here. And Oklo, this nuclear startup has experienced remarkable growth with a 1-year return, 431% driven investment optimism. Okay, so I would look between that one and what was the other one? Fluor. So now let's say compare. And we're going to say OKLO versus, and what was the other one we were looking at? It was floor, FLR. So we FLR. So let's compare these two and see how this works out. So what I want you to understand, folks, is not only, what is a stock, how do you research it to figure out, is this an investment I want to put my money into? Kind of like real estate. If you watch me on a daily basis, hopefully I'm not telling you, you have to buy real estate, because, real estate is risky. It's not on the forefront of the laws of the risky. So let's go over and just analyze these two companies. So Oklo, hopefully I'm pronouncing that right. It was founded in 2013. It's in California, focused on the stock performance. Current price is 53%. 1 year return, 543%. Approximately pros, significant stock appreciation over the past year. Cons, pre-revenue company with operatings and invoices not expected until 2028. So that's kind of a pretty risky asset that we're seeing right through here. Let's look at Floor. Floor right now provides engineering, construction, current price. I want to know, what is the year-to-date return? Minus 16, almost 17%. 5-year return, 1-year return. Established company with a diversified portfolio across multiple sectors. Stable revenue. The cons are recently underperforming in the stock market. Lower direct exposure to nuclear energy compared to pure play nuclear companies. Okay, let's get over to pure play. That's giving me an idea. Pure play nuclear companies. So how can we do that? What stock would I invest in for pure play nuclear companies? Let's see what this one comes out and tells us to do. So we're going to break this down. Top plays, Cameco, Energy Fuel, URG, Oklo. Okay, so let's see what we got here. So here's my thinking. I'm going to look at OKLO. So that's what we're going to look. So we did some research on that. So now we're going to take that data and we're going to move it over to right through here. So let's get over to Yahoo Finance. And the reason why I'm going to do that is I want to figure out its ticker symbol. I'm sorry about that. Let's put in the ticker symbol of this company. Let's go back over to where we were when we looked up that. And it is OKLO. So we're going to go back to OKLO. We're going to plug that in. You're going to see that right through here. And this is now giving us the Oklo stock. Okay, so now here's what you're going to see on the market. Okay, so this is when you look up that stock, this is what you're going to see. Now let's break this down for you, because I want you to understand multiple pieces of this. So this gives us the company name right through here. This is a ticker symbol. So if you ever called your broker, you want to look at what this company is doing, one of the easiest ways is just to plug in what's called its ticker symbol. It's right through here, OKLO. That's it. And here's what you're going to get. And Yahoo Finance is probably one of the better systems to use to track these things. So it's going to give you a 1-day return, a 5-day return across the board. Let's get to see where we are year to date. Year to date, we're up, 153%. So is this a good one that might, we saw it spike back here. Is it going to spike again? I don't know, but let's just keep going through, because I want you to understand all these pieces of it. You go down through here. This is going to give you the previous close, the opening, the bid, the ask, day range. So this ranged in a 24-hour period from 46 to 54. That's a huge spread. 52-week range. This price, the stock price was ranged from $5 to $59. Volume is 42 million a day. You go over to here, PE ratio. There is no earnings, so that's the scary part of this. And the 5-year target. And then it's going to give you a whole bunch of other information. Is it a good time to buy now? Did we miss out because we know the nuclear, piece is going to come into play? Well, maybe not. So then you're starting to see there. Now, if you want to start really looking into its financials, this is like, okay, you want to start kicking, the tires on a house to see if you qualify for a house. Now you start looking at it. Okay, what's the price? What the taxes? What you can look on in this is just go over here. Let's look at the financials. And you can see a lot of information here that will also help you compare. And then with this one, you can compare it against other businesses in that industry and so forth. But you can see down through here, operating income minus $63 probably million, because they're not making any money yet. This is what happens to a lot of companies, and then as soon as they go profitable and things start to work out, their stock goes crazy. You can look at the holders. Who actually holds this stock? So 23% of shareholders are inside the company. That's good news. So you have a quarter of the stock owned by people on the inside. They're most likely going to want this company to go really well. So you have these people up through here. What they hold. So like, for example, Vanguard holds 4.38 million shares of this. Date reported on the 31st. It was their percentage out, 3.15 and so forth. So it gives you who owns this. You see BlackRock owning this, Morgan Stanley owning this, Vanguard owning this. So a lot of big firms are owning this as well. So now let's go back and look at, is there any news coming out? Well, we know the news because the news is basically from the Trump administration telling us that the stock is good. So let's just say, for example, we want to buy this OKLO. There's a lot more in-depth ways to go about this. So we're going to move over here and we're going to add this to our position. Let's go into this, and where are we? Right through here, and we're going to go back to my portfolio, and we're going to add OKLO to our portfolio. So let's go there now, and we're going to add symbol, and we're going to say OKLO. So that's what we're going to put in here. We're going to click this. We're going to add it. Okay, so we got that in there, but I need to add a little bit more share lots. So we're going to add in, we bought 1 share of stock today, of that stock. So that's what we're going to do in that. So add the lot, and I don't need that one. So we're going to go back to this and see where we're at. So we now added our position at Oklo into this, and now when you start watching or continue to watch me going forward, you understand, okay, what that is, how it's doing. So over the last 3 or 4 months, we've added positions in from steel, we added in robotics, and so far we added in nuclear. So why you also want to invest in other things, this is called what we call diversification. Okay, so for example, let's just go through the portfolio that we have today in our returns and different classes that we've invested in. And I'll kind of explain to you the whys behind it, why we did what we did. Let's start at the bottom, because at the top we just added that position. So down here, this is Bitcoin, and what it is it's Bitcoin basically on steroids. So this is whatever Bitcoin does, it's a 2 times movement on that chart. So you can see we bought 1 share back on 9/9 of 2024. We bought 1 share at $24 a share, and now it's at $59 a share for 145% gain. Okay, that's not something that's usually common. Okay, so, but that's where I throw in, I'll say, my risky money. Okay, I'm going to throw in any risky money I have, anything I just kind of want to play with, I guess. I'll throw into the Bitcoin portfolio. But now here's what we want to look at. We want to look at the other things, and it's called diversification. One of the biggest things I always talk about is Berkshire Hathaway. And if you just recently heard that Warren Buffett, he's retiring from Berkshire Hathaway, and the stock, it dropped based accordingly to that. But this one is a conglomerate. So Berkshire Hathaway, it's a company that owns a whole bunch of other companies, and that's why we invested in it. Coca-Cola, things like that. Let's go over to Berkshire Hathaway so you can understand what we did with this. But I want you to see the holders, the profile. Let's see the profile, because I don't think it really gives us the positions that this fund, I'll call it a fund, but Berkshire Hathaway is, well, basically, they just keep taking all their money and buying other companies. And I'm not sure in here if it'll tell us all those other companies that it owns. Let's see here. News. We might be able to go to analytics. Berkshire Hathaway, Exit City, NU Holdings. Heinz is evaluating strategies. So Berkshire Hathaway owns a whole bunch of a lot of things. Okay, it's a very diversified company. Let's see if I can go into the profile. No, none of these will give us that information. So you're going to have to do your own research on that. But look up BRKB. There's also a BRK, I think an A. It's about $50,000 or $100,000 a share or something like that. It's crazy. This is basically the same thing, but I think it's divided by 4. So that's Berkshire Hathaway. XLF. Well, the reason why I bought into this is the financial sector. It's a basket of financial stocks. Usually financial stocks do well in an environment where, well, we were heading there, but when you start seeing the short-term end of the yield curve coming down, and the long end higher, that's how banks make money. They lend short term and they reap the benefits long term. So meaning they're going to give you a long-term loan, but they're going to finance it with short-term money and charge you a longer-term rate. Let me go over to here and show you what a yield curve should look like. So if you've never understood what the yield curve is or what it does, let me just explain to you what the yield curve is and kind of how it works. So we're going to go down through here. I forget what one of these actually works the best. Let's see. There's one that just gives us actually the chart. Let me see if this is the one that we go through. No, that's not the chart. I want to show you the actual chart because when you see it, you're like, okay, that doesn't really make much sense. And I think this is it. Okay, so here's interest rates where they are today. And this is also one of the reasons why President Trump's kind of ticked off at the Federal Reserve, because he's like, you're keeping interest rates, the short-term interest rates, way too high. Okay, and let's get over to it. If you look at the economy at a glance, you're going to see right through here. We go through this on my channel every day. And you're going to see a rate right here. It's called the federal funds target rate. This rate right here, this is actually created by the Federal Reserve. So when they come in and they say, okay, we cut rates or we increase rates, this is what they're doing right through here. This is the only rate they affect, is the federal funds rate. What they do is they monitor the state of the economy. So they look at PCE, the number one factor of inflation that they really pay attention to. And it's coming out this week, actually, on I think Thursday or Friday. So they focus in on the PCE. This is inflation. Okay, this number is coming out this week, like I said. We're also going to get a new GDP figure. So this figure is supposed to start going up again. This was a 2.7 plus previously, and it plummeted. And then you've seen the unemployment rate, which is staying sticky right now, right about 4.1, 4.2, right in there. So this is saying, well, inflation's coming down. We have GDP, well, it fell off a cliff recently, but it's starting to tick back up. We have an unemployment stable and doing pretty good. We have wage growth that's doing pretty good. Then we have this front end, the short end yield curve at 4.5. Well, here's what's causing this debacle. Here's the yield curve. Well, yields up through here. This yield, well, let me go back to 2020. And this will make much more sense to you folks. So this is probably as close as to a normal yield curve as we should get. Okay, the front end, if you have nothing, no terms, you should have zero. But if you get a 1 month, you want to invest your money for a month, you shouldn't be getting 4, 5, 6%. You should be getting somewhere down the tune of this. Remember 4 or 5 years ago, your savings account was earning like 0.1, maybe if you were lucky. This is a normal yield curve. So what's happening is this. You're going to see this through here. Well, the Federal Reserve's keeping rates at 4.25 to 4.5. So in this realm here, so you got the front end all the way up here. Well, this is what's causing the dilemma. So as soon as the Fed starts to cut rates, and that was my goal in going into 2025, they're going to continue to cut rates. That's going to increase the profit margins for banks because, again, they lend you, they borrow their money short term and lend it to you long term. So the bigger these spreads, the bigger the profit margins are at the bank. So that was my assumption and my reasoning behind buying the financial stocks. But as rates come down on the Fed, these profit margins will go up and they'll continue to rally. So that was the thinking behind why we included the XLF and what we did there. So now let's go back to our holdings. And basically what I was trying to do is have you guys understand what these are and why we bought them. Why did we invest in them? Okay, so the next piece of this puzzle is right through here, and we went over this earlier. This is mining stocks. Okay, so let's go back through here. And here's what we remember: mining stocks, that was in vogue not too long ago. It's a metals and mining ETF, because we need metals in this country and everything else. Here's the nice thing about this is the PE ratio is at 16. That's historically low. Let's look at a year-to-date chart on this thing, see how we're doing there. It's up 9% year-to-date. Over 1 year, it's down 3%. So we picked up this in a nice area when we bought it. So because we're up still profits there. Am I buying into these positions right now? Maybe this metal sections I wouldn't be, but we're still up over here 6.5% or 6.1%. We bought into this position how long ago? We just bought that position. So being up that much, that fast, I'll take it. The next one is the steel ETF, and this is a basket of steel stuff. Now, we just added to that piece recently, so I won't go over that. So that's where we're looking at through here. We just added the OKLO, so that's the reasoning. I have these investments through here and where we are. But again, this is where diversification comes into play. One of these might be down. So for example, if you go over here, well, heck, if you go to Oklo, I know we just bought the position recently, but you go over here and it's like, well, that's not increasing at all. But you can see across the portfolio, we have income coming in or returns on our investment. We start down here at the bottom, BITX. This is that Bitcoin on steroids, basically. It's up 145%. We have a 5% return on Berkshire Hathaway. We added to our position, so I want to show you guys how we can dollar cost average. So a lot of people are saying, okay, the stock's too expensive. Well, are you going to wait for it to drop to buy some? Why don't you just, if you think it's a good company, like you did all your research, and now you're saying, okay, it's a good company. Well, instead of, let's say you have $5,000 to invest, instead of throwing all $5,000 into it, maybe you increment it into saying, okay, every month I'm going to buy $1,000 worth. So you can do it like this. So here's, for example, we bought the Berkshire Hathaway stock on 9/9. We bought it for $459 a share. On 5/14, we bought it at $503 a share. Okay, it's up $5 from there, or $6 from there. So you can see our return so far here is 49%, or I'm sorry, 10%, but the position we just added is only up 1% because we just added it. So that's what you're seeing down through here. And these are the positions that we all hold as the rate update followers on the channel. So that's what we're looking at in regards to a portfolio. And hopefully that you can understand a little bit more now is when you go over to this and you go over to all these other websites and you're seeing, oh my goodness, the stock market is just on fire right now. Hopefully you can understand a little bit more, like when it comes, Dow surges over 700 points amid Trump latest trade thaw. This is, you have to really know what's going on in the economy, in the world, when it comes to all this stuff. And then that's the whys behind it. So that's what we're seeing right through here. Let's just go over and see if there's any major headlines that should be causing any concerns today, but I will be back at the closing bell. First thing we want to go over here is we know the stock market is rallying right now because of those Trump, we'll just say he unhalted some of those things in there. Hey, Dennis, I got somebody here finally watching me. So, hey, folks, we got Preston. Do you think we might see home refinance rates in the 5s next year? No, and I'll explain to you why, Preston. It's kind of going over the where the rates were when we were talking about the Fed. Hold on 1 second, Dennis, because Dennis had a great idea a couple of years ago when he said he was going to short the bond market. But here's why rates aren't going to go anywhere soon. If you have the federal funds rate basically at 4.5, you're never gonna have mortgage rates at 5.5, 6. And the reason being is no investor is going to give up. If you can get a 4% or 5% yield with no chance of default, this is where the spread comes in on where, how much risk premium people are needing to buy mortgage-backed securities. And that's why you take this, and there's no risk to this. So when you look at treasuries, if you can buy a treasury bill, 6-month treasury bill at 3, 4, 5% on the yield, no investor is going to want to take the risk on a mortgage at 5 or 6%. They're going to need more of a yield to take on that debt. Here, let me explain it to you. Let's say, for example, you have an investment, 2 investments you can make, or 3 investments you can make, and you have $1,000 to put that money in, kind of like we were doing with the stock market. And you have these 3 investments, and they're all bonds. You have this one bond that's of the federal government. There's no chance, 0 chance of default, anything, and it's paying you a 4.5% rate. Okay, so now you have this other bond from a company that's paying you 5.5% rate. Let's say it's Apple. Apple's got a ton of cash. They wouldn't really sell bonds, but it's a fantastic company. Okay, and then you have mortgages that they could what you have to understand with the mortgage piece of the puzzle is they don't have to default for that bond to really go bad. If the person refinances, that means that money in that bond that was in that mortgage is no longer part of that mortgage. And I won't go into all details with that. So what would you rather invest in, for your money? Would you rather take a bond with no chance of default at 5%, a corporate bond paying you 6% with some default, or a mortgage-backed security bond at 5%? Well, the last option you would take is the mortgage-backed securities because it has a more chance of default. And again, the default isn't meaning the person went into foreclosure. The default even means they refinance, because what that mortgage bond is it's a whole conglomeration of tons of mortgages. when one loan pays off, that money gets pulled out of that bond. So now you have maybe a less of a yield on that whole bond. So that's how all that works. And that's why a lot of people don't really invest in the mortgage bonds unless they have a higher premium on that to compensate for the risk. So that's what we're seeing in the markets right now. So again, if you can get no chance of default at 4.5 or between 4 and 4.5, how much is it going to take for you to buy a mortgage bond? 6, 7? Well, that's where this comes into play. Let me go pull up mortgage rates for today and let's see where they're faring. So mortgage rates are down. They're actually below 7% today. So we have mortgage rates at 6.97%. So again, would you rather buy a no chance of default government bond at 4.5 or a mortgage bond at 6? 6.5? No, it's taken 6.97 for people to buy the mortgage bond. And basically that's how all of that works. So let's get to the next question. What do you got for me? I don't know if you're still here, Dennis, but I appreciate you. The highest value stock on the market. The highest value stock. I don't know what you were talking. What were you referencing, man? Time in the market is easier than time. Perfect example. It's kind of the same thing with the housing market. If you're looking to buy a house today and flip it next year and make money, I wouldn't highly suggest it because you're going to have transactional fees that are probably going to put you behind the 8 ball for at least a year or two. So you can't really make money in real estate unless you're truly a flipper or you just kind of, I won't say luck out, but you're in a good market. Right now, most of the times you see a lot of homes I've been calling it for the last 2 or 3 years. They're going to be stagnant in most parts of the country. I'll bring this up at the closing bell. I had 2 neighbors. Actually, the neighbor right next door to me that lives right next door put their house on the market on Friday. And they had a contract on Sunday, and they actually accepted they had 3 contracts on Sunday. They accepted an offer on Monday. So within 48 hours, that house sold. Another house down at the end of the block, it's about 12 houses away. It didn't even get to the market. It went pre-market thing and sold. And folks, you're not, the house prices are between, let's say, 700,000 and 900,000. So it's not even a cheap market. And we're seeing that activity here. So yeah, there are areas like California, Austin, parts of Florida that are crashing. Yeah. And I've been adamant about that for the last couple of years. And everybody says, all I do is push real estate. I don't push real estate, folks. My job is I'm actually a mortgage loan officer. And if you're out there looking to buy that first house or refinance, I'd love to help you. So let's get back over to any other questions that we got. So Preston, thanks, Dan. I locked in a refinance recently at 6.99%. Preston, hopefully you're using us, and if you're not, please email me. I'm going to ask you to email me a copy of your loan estimate so we can check that out for you and see if there's anything out there that you can get a little bit better on in the rate. So there's my email address. If you don't mind, just shoot me your loan estimate if you want. I'd be more than happy to look at that to see if we can maybe save you some money on the rate or maybe in the fees. So that's that. So what do we got, Dennis? What you got for me, buddy? Berkshire Hathaway is the highest priced stock on the market. Oh, I got what you're saying. Let's look it up. I'm going to look up, folks. This is pretty wild. If you look up Berkshire Hathaway stock, I'm just going to BRK. There's a BRKA. Here it is, BRKA. I give you the BRKB, and here's the reason why. Let's look at the stock price of this thing. It's 700. I was way off. $760,000 a share. So if you have $250,000 in your pocket right now and you want to buy 1 share of Berkshire Hathaway, there it is for you. So I buy, like I said, I buy the BRKB. You can do anything of this because you can buy fractional shares, folks. You don't have to just buy 1 share of this. But this is the BRKA, $760,000 a share. And then if we go to BRK, and you'll see down through here, it's B. It's actually just kind of the same thing, but they divide it. I'm almost sure they divide it by 4. And Dennis might be able to validate that, and much more than 4. So there's a factor in here. I don't know what that is. I can compute it out, but it's the same stock. You're holding the same positions of things. It's just a fraction of the price that you're going to get. So that's what you were talking about, Dennis. So thanks for popping that in, man. So that's basically it for today. I hope you guys found, I would love more participation if you guys would throw some questions in here because you took the time to come on board. I would really love for you to understand, how to invest your money because, by the time you get to me to look to buy a house, hopefully you've already set up things like this. And if you have a 401k with your job and they're matching you, they're saying, hey, I'll give you 4 or 5% on your money. Please, folks, take it. That's an automatic return you're getting on your money. So if you can, contribute $3,000-4,000 a year, that's a couple $100 a month. I'm not saying it's easy, but put it away. Just treat it as a bill that you have. So then you're going to set up that account. Your employer hopefully is going to give you 3, 4, 5% match. So now you got that return going for you. Then you imagine if you can even get some of these shares down through here and get another 6, 8% return on your money. If you look at it and you compound that money over time, let's do it for you. I'm going to go over to ChatGPT and let's just see how this works. If you invested, and I'm going to show you how investing, kind of like Dennis said, it's time in the market, not timing the market. So let's go into here, and sorry, Dennis, I'm going to take you off of here for 1 second. Let's go over to Preston. I think the American dream is being crushed because of rates, from mortgages to auto industry. All the loans cost too much. I get it, but here's a tough thing is, and I bought my first house in, I think it was 1989 or 1990. I was making 20 grand. My wife was making 20 grand. Rates were in the teens. And my first mortgage payment, I remember my rent was going from $1,000 to $1,200. And I was like, well, shit, I can just buy a house with a $1,200 payment. So I had enough money to put down a down payment. And it was an interest only kind of weird ass loan. And I got into my house. And a lot of people say, oh, the subprime mortgages are the ones that cause all the foreclosure. Well, yeah, but you hate to say there's two parties in the transaction. So if you bought a house, there was a buyer, seller, a person who financed it. So if you signed on the papers, even though you should have saw the payments, I'm not going to go into that realm, but you understand what I'm saying, is get into a loan that I knew I could afford it. I knew I was making more money because I just got in the mortgage business, and every month I was making a little bit more and a little bit more. So I knew I could afford those payments. And my wife was brand new into the working industry as well, because I knew her income was going to go up and we weren't going to have any problems with it. And that's what we did. So yeah, there's always been, you go back in history, you can see mortgage rates at, 18%. So when you're looking at a rate at 6 or 7%, even with this, taxes and everything else, it's always been a little bit hard to buy a house. And that's the beauty of it all. If everybody and anybody could buy a house, like we saw during the subprime market, you see what happens. Okay, so if you're looking to buy a house, be prudent on what you're looking at too. But let's get into dollar cost averaging. So let's say I invested $1,000 18 years ago at a rate of, let's say the average market, the 7%. So probably the stock exchange averages at least 7% a year. If I put $1,000 away 18 years ago, how much would it be worth? Again, just throw it into an account and forget about it. Well, let's figure out if it's worth it. So I threw that money in there. Final value, $33.86. So that's $1,000. So you went up. So now let's. What if it were 10,000? So the $1,000 goes to $3,300. Maybe that wasn't enough to entice you because it wasn't. But look at this, $33,000, and you just stuffed that money away and didn't. That's a 7% interest. You see a lot of these stocks that are up 12, 18% year after year after year. The S&P a couple years ago was up 25% back-to-back years. So you can understand how that works. Let's go in through, let's ask it this and see and then I'll leave it at that. Dollar cost averaging. How does it work? And show me an example. So this is going to be how the dollar cost averaging works. So basically the fundamentals of it is every paycheck, say you're going to put money into an account. That's dollar cost averaging. You have an allocated amount you're going to set specifically at a certain time. So let's say you invested $500 a month into a mutual fund or stock for 6 months. Okay, there's what you're looking. Average price paid. And here, so basically what it was saying is you bought every month. This was the share price. So some months you bought more, sometimes you bought less, and it goes down through here and it says, so even though the average market price is $40, your average cost was $38. Let's go back. How much would this person have after 20 years using your example? So if you did this for 20 years, how much money would you have in the bank? So assume monthly you put $500 away. How much money would you have in 20 years? About $250,000. That's how it works. So putting $1,000 away each month, into your paycheck. So $500 at your job, maybe $500 on your own. This is how it works, folks. So dollar cost average. So you're not buying that stock at the highest price and then, it went down in price. Kind of same thing, but you can't do this with real estate. And that's what we talk to people, so if you're getting into real estate, you got to know what you're getting into. There is risk involved, and a whole bunch of other things. So now let's get over to kind of what I do for a living. My name is Dan Frio. We're going to conclude it with this. My name is Dan Frio. I'm actually a federally licensed mortgage loan officer. I'm not a financial planner. I'm not a financial advisor. Please do not trade or buy any of these stocks on my recommendations. This was for entertainment and educational purposes only. But if you're out there looking to buy that first house, maybe you're looking to refinance. As rates come down, I'd love to be able to help you. I'm federally licensed, so I work at a federal bank. Yes, that's what I do. But the cool thing about our bank, and there's not many of these around, there's only a handful of these banks around, we've set up ourselves with 33 other banks and lenders to help you guys out when it comes to buying or refinancing. How does this all work? Well, we have a slogan: one application, one credit pool. We're going to shop your loan over 30 different lenders. So what people do is just go to my website. I get comments all the time. Dan, how many pre-approvals should I get? And I'm like, why do you need more than one? They're like, because I got to check rates. Well, that's what I'm here for. You imagine checking 33 rates with one application right through here and one credit pool. You can do that right through here. So right up here, you can put in your application. If you're leery of that, just schedule a consultation with me or Alan right through here. If you're even leery of that, just call. Our number is 844-775-5626. I'd love to be able to help you. If you are new to the channel, please, I have over 3,000 videos on my YouTube channel. Here's some of the ones that we just hand selected. If you're looking to buy that first house, this might be the one for you. If you're a current homeowner now and you're looking for a spot to refinance, we have a RateWatch tool here. You're just going to plug in the numbers. When the interest rate hits exactly where you want it to be for the refinance, I'll be reaching out to you. You want to check and see, how maybe you can boost your credit? Right through here. This is actually the system I used, and believe it or not, last month I got a kudos that my credit score went up 80 points. I've been using their system, and they'll actually prompt you to tell you when to pay those payments. It might be a week before those payments come due, but it'll tell you exactly when to make your payments on those credit cards and car loans to get the most out of your credit score. So check that out as well, and you can also go to, I actually created this website. It's called creditscoresandmore.com. If you really want to know more and more and more about credit, please check this out. I try to keep this updated as much as I can. What it'll give to you, it'll give you a free cool. And I always ask people, don't do anything. Don't subscribe to any of the bells and whistles that give you. The free system is plenty. So if you go to creditscoresandmore.com, you can hit the free credit score right through here and sign up for that system. This one is your true credit score. What that's going to give you is your FICO credit score. You have over 35 different credit scores. This system is going to really help explain it to you. And then if you're a renter, and your rent's not showing up on your credit report and you want it to, you can put that on right over through here. And there's a ton of information here to help you guys out and maneuver. If you're looking to build up your credit, monitor your credit, or even get a mortgage, you can do that right here on the website. So thanks for watching, folks. I hope you learned something today. I know I'm not the best teacher when it comes to this, but I just want you guys, I'm trying to make the effort to help explain to you guys how all this works, because I want you to change your mindset and get out of that doom and gloom mentality, and let's work on, instead of being a, what do they call that? I don't know, but there's Joel Osteen. I used to watch him a lot. Instead of being a victim, let's become a victor. And I don't I'll leave it at that. So my goal here is to just help you guys understand the markets. So thanks for watching, folks. I greatly appreciate you guys joining me today, and I'll be back tomorrow with my mortgage talk. So if you're out there looking to buy, refinance, and have questions for me, I'd love to be able to manage or answer any of those questions for you tomorrow on my live event as well. And but I do post daily. I post the opening bell and the closing bell to help you guys understand what's going on with stuff like this. And our goal here, our main goal here, is to help you with real estate and to understand why these things are doing what they're doing. So thanks for watching, folks.